Hello everyone, I am Dr. Ramandeep Kaur, Faculty, Department of Commerce of Bhopal, School of Social Sciences, and I am here to discuss with you the numerical aspect of consignment accounting. Now in brief, consignment means to consign, that is to transfer or deliver the goods to another person. The process of sending the goods from one person, that is the owner, to another person, that is the agent, for the purpose of sale is known as consignment. Now in consignment accounting, there is a person who is the owner of the goods, and this person is known as the consignor. There is another person, that is the agent, who is known as the consignee. Now the goods that are being transferred from the owner to the agent, that is from the consignor to the consignee, are known as goods sent on consignment. Now why these goods are being transferred by the consignor to the consignee? So that the consignee or agent can sell out these goods further to the customers. Now when the consignee is performing this service for the consignor, that is when he is selling the goods to the customers on the behalf of the consignor, obviously he is going to charge something, and this amount is known as commission for the consignee. Now the consignee actually sells the goods to the customers and realizes the sales proceeds. From the sales proceeds, he deducts certain expenses that are being incurred by him, his amount of commission that is being payable, and sends the remaining amount to the consignor. So this consignee, he prepares a statement that is known as statement of account or statement of sales that contains the details of the goods that are actually being sold by the consignee, at what rate the goods are being sold out to the customers, the expenses, amount of expenses that are being incurred by him, and his amount of commission that is payable. He deducts all the amounts, all these expenses, and further sends the remaining amount to the person that is the owner or the person that is the consignor. So this is actually the process of consignment in brief. Now let us understand this process of consignment with the help of a numerical question. Now for example, on 1st of April 2020, Mr. Y of Mumbai consigned 500 toys at the rate of 350 per toy to Mr. A of Agra. So here Mr. Y of Mumbai, he is the consignor who has transferred the goods, who has transferred 500 toys costing rupees 350 per toy to Mr. A, and here Mr. A is the agent or Mr. A is the consignee. So the goods are being transferred from Mr. A so the goods are being transferred from Mr. Y to Mr. A. Now the following expenses are being incurred on consignment. So these are the expenses that are being incurred by the consignor. For the cartage, the rupees 500 are being incurred by Mr. Y, for freight 2000, and for insurance it is 2500. Then there are certain expenses that are being incurred by the consignee as well. The consignee Mr. A has incurred 1500 for cartage, unloading charges are 1000, and 2500 is for the go down rent. Now further, on 31st March 2021, an account sale, this we have discussed, this is a statement that is being prepared by the consignee and sent to the consignor containing the details of the goods that are being sold out. So an account sale was received from Mr. A showing 450 toys were sold out at rupees 100 per toy. So remember, 500 toys are being transferred by the consignor to the consignee. Out of 500 toys, only the consignee is able to sell out 450 toys, means 50 toys are your closing stock, they are the stock of unsold goods. As per the agreement, 5% commission is to be payable to Mr. A since he is selling the goods on the behalf of the owner. Now, as per the question, you have to pass the journal entries in the books of Mr. Y, who is the consignor, and then you are supposed to prepare the consignment account. And also you have to show the valuation of the consignment stock, that is valuation of the closing stock. Now first of all, let us understand what will be the journal entries in the books of Mr. Y. Mr. Y, who is the owner, or Mr. Y, who is actually the consignor. So, the first journal entry. Now, in consignment, we have already discussed that under consignment, first of all, the goods are being transferred from the owner to the agent. So, total 500 toys are being transferred at the rate of rupees 350 per toy to Mr. A. So, for transferring the goods, the first entry is consignment to Agra account debit to goods sent on consignment. Remember, the goods are going out from the account of the owner, therefore goods will be credited, goods account will be credited, and the cost will be 500 into 350, that is 1,75,000. So, first entry for the transfer of goods from the consignor's place to the consignee's place, it is consignment account debit to goods sent on consignment. Second, when the consignment expenses are being paid out by the owner or the consignor, there are three expenses that are being paid by the owner. First was cartage 500, then freight 2000 and the insurance 2500. So, when the expenses are being paid out by the owner, cash is going outside, therefore cash or bank account is to be credited. So, the entry is consignment account debit to bank account, and this is 5,000 is the total amount for all the three expenses. For cartage it was 500, 2000 for freight and 2500 for insurance. Further, the consignee has also paid out certain expenses for consignment. He has paid out 1500 for cartage, unloading 1000 and 2500 for go down rent. So, when the expenses are being paid out by the consignee, entry is consignment account debit to consignee, and here consignee is Mr. A. So, entry will be consignment account debit to Mr. A's account. Again, all the three expenses are being totaled and the amount comes to 5,000 rupees. After this, after incurring certain expenses, these goods are being sold out by the consignee, by the agent in the market. 450 toys are being sold out at rupees 1000 per toy. So, here for the sales proceeds, the amount is being received by the consignee. So, the entry is A's account debit. A is the consignee. Actually, the entry is consignee account debit to consignment, and here consignee is Mr. A. Therefore, A's account debit to consignment, and the amount is 450 into 1000, that is 4,50,000. After that, for the amount of commission that is being payable to Mr. A, who is the consignee, remember as per the agreement 5% is the commission that will be received by Mr. A. This commission is always payable on the sales proceeds. The sales proceeds are 4,50,000. So, 4,50,000's 5% is 22,500. So, this amount will be realized by Mr. A, and the entry is same like when the consignee pays out the expenses, entry is consignment account debit to A. So, for commission as well, the same entry we actually make, that is consignment account debit to A. So, we can pass a separate entry for the expenses and for commission, or we can even combine these two entries together and show the amount of expenses and commission together by passing one single entry, that is consignment to A. After that, as per the question, 500 toys was sent by the consignor and the consignee is only able to sell out 450 toys. Therefore, 50 toys are still unsold. So, 50 toys are your closing stock. Now, how to calculate the value of these 50 toys? So, how to calculate the value? For the valuation of closing stock, as already discussed, the formula is cost price of closing stock plus proportionate expenses of consignor plus proportionate expenses of consignee. This will give us the total value of the closing stock. So, here in total 50 toys are remaining unsold. At what price these 50 toys were transferred to the consignee? At a price of 350 rupees. So, 50 into 350, the amount is 17,500. Now, in this figure, in this cost price of 50 toys, you are going to add the proportionate expenses of the consignor. Remember, the total expenses of the consignor are 5,000. So, these are the total expenses incurred for sending 500 units. So, 5,000 divided by 500 will give us cost per unit. Cost per unit multiplied by 50 units that are unsold will give us the proportionate expenses incurred by the consignor on specifically these 50 units. Again, in this we are going to add proportionate expenses of consignee. Now here we are going to consider only the cartage expenses and this unloading charges of 1500 rupees. Always remember there are certain expenses that are not to be considered while valuation of the closing stock. These are the expenses that are being incurred by the consignee once the goods have reached his godown. So once the goods have been reached to his godown, there are certain expenses that are being incurred by the consignee and these are the expenses that are not to be reimbursed by the consignor. So this amount of 2500 rupees for godown rent won't be included for calculation of the closing stock. So it is only 1500 plus 1000, that is 2500. These are the total expenses that are being incurred for 500 units. So what are the expenses that are being incurred for 50 units? It will be 2500 divided by 500 into 50, that is 250. So the total amount for closing stock will be cost price, that is 17,500 plus proportionate expenses of consignor, that is 500 plus proportionate expenses of consignee, that is 250. So the total amount will be 18,250 rupees. This is the amount for the closing stock. So when we calculate this closing stock in the questions where there is certain stock that remains unsold, so there is an extra entry that we are supposed to pass and the entry is consignment stock account debit to consignment account and the amount will be the amount that we have calculated right now, that is 18,250 rupees. After this, there is another entry when there is profit or loss that is calculated through your consignment account. So we will leave this entry right now and we will come back to this entry once we prepare the consignment account, and then a reverse entry is being passed at the end. The amount of goods that are being transferred to the consignee, the same amount is transferred to your trading account and the closing entry is being passed. So the entry is goods sent on consignment account debit to trading account and the amount is same, 1,75,000. This is the amount of the goods that are actually being transferred to the agent or the consignee. So these are the journal entries that we are supposed to pass in the books of Mr. Y, who is the consignor. Now let us understand next how to prepare the consignment account. Now this is the format of the consignment account. You will find that the format is same like your trading account. One side you are having, the left hand side is your debit side, the right hand side is your credit side. Always remember, consignment account is a type of nominal account like your trading account. That is, it records all the expenses and incomes. Expenses are recorded at the debit side as the rule says and incomes are recorded at the credit side as per the rules. So remember, the first entry was when the goods are being transferred from the consignor to the consignee, the entry was consignment account debit to goods sent on consignment. So goods sent on consignment account was actually credited in your journal. So when you are preparing your consignment account, it will come at the debit side with the same figure. So two goods sent on consignment, 1,75,000. Then when the second entry was for the recording of the expenses that are being paid out by the owner, that is the consignor. So the entry was consignment account debit to bank. So bank account was credited in your journal. So here bank will come at your debit side, and then in the inner column you will mention all the expenses that are being paid, and then you will write down the amounts in the outer column. 500 is for cartage, 2000 is for freight and 2500 is for insurance. This is, we credit the bank account when the consignor himself is paying out for the expenses. When the consignee is paying for the expenses of consignment, we always credit consignee's account in the journal. So consignee is Mr. A, his account is credited when he is paying out the expenses. The entry was consignment account debit to A. So when we are preparing this consignment account, A's account will come at the debit side. And remember, Mr. A has paid for three different types of expenses: 1500 for cartage, 1000 for unloading charges, and go down rent 2500. Here we are going to take up the total expenses that are being incurred by the consignee, that is Mr. A. But while valuation of the closing stock, remember we have considered only the first and the second expenses and we have ignored the go down rent. Coming to the credit side, it was the consignee who has actually sold the goods on the behalf of the consignor. Therefore, the entry was consignee's or A's account debit to consignment. So, A's account was debited in your journal. So, here A's account will come at the credit side with the sales figure of 415,200, that is 4,50,000 rupees. Then this is the figure for closing stock, like in your trading account. At the credit side, we mentioned buy sales and buy closing stock. So, here is your consignment account where the sales are not directly taking place by the owner or the consignor. It is happening through the consignee. Therefore, at the credit side, we will write down by consignee or by Mr. A. And then instead of closing stock, we actually use a specific word, that is consignment stock, and it is showing 18,250 rupees. That is the value of the closing stock that we have calculated right now. So, after writing all these entries, we will do the total, and we know if the credit side is greater than the debit side, obviously the balancing figure will come at the debit side, and this balancing figure is profit. This balancing figure will be transferred to profit and loss account, and if suppose the debit side is greater than the credit side, the balancing figure will come at the credit side, and this balancing figure is a loss. So, in this case, for specifically this question, under consignment, Y is able to generate a profit of 2,83,250 rupees, that is transferred to P&L account. So, when there is profit, so the entry is consignment account debit to profit and loss account. Remember, this was the entry that we have left. So, this entry we are going to pass with the amount that is calculated from the consignment account, that is 2,83,250 rupees. So, these are the journal entries that are supposed to pass for your consignor's account. These are the common journal entries that you are going to find almost in every question, and this is how the calculation of profit takes place under consignment account, and this is how the valuation of closing stock is done using the formula cost price plus proportionate expenses of consignor plus proportionate expenses of consignee. So, thank you so much. That's all for today. Have a nice day.